to open our first Corporate Infrastructure and Regulatory Services Scrutiny Committee by first thinking of the many who have come before us, dedicating their time and efforts for the people of Devon. In particular, I'd like to mention previous Chairman Councillor Dewhurst and Councillor Lech, who is sadly no longer with us. So I'll open with one of Councillor Lech's appropriate thoughts for the day from last November. A quote from Plato, obviously translated from Greek. A wise man speaks because he has something to say. A fool speaks because he has to say something. So please remember to keep our questions to the point. Consider if the question has already been answered. Keep your observations focused, and let's get through our meeting as quickly as possible, but with due focus and attention. Housekeeping. A fire alarm is not expected today, so if the alarm sounds, please make your way to the nearest exit and congregate on the Cover lawn. Please switch off or silence all mobile phones. Please can I remind those joining remotely to mute their microphones and turn off their cameras unless speaking. Please can all speakers ensure they are talking into their microphone, and a reminder this meeting is being live streamed. Cabinet members and officers are asked to keep introductions to their items brief, raising key points to the committee, who will have read the papers. And please do not, if you have any presentations on the screen, share until your time commences. As chair, each morning, as I start work as a Devon County councillor, I ask myself, is what I am doing today going to benefit the people of Devon? Today here, my answer is yes. I ask that we do not use acronyms in this meeting. We may or may not be familiar with them all, but members of the public, our constituents who choose to watch, may not be. So please, no acronyms going forward. We'll also have regular short breaks if our meetings are long. Every hour, Louise will remind me at an appropriate time for a short break. I find this is preferable to people nipping in and out whilst our business continues. Okay, moving on. Apologies, Louise.
Thank you. We have apologies from Councillor Richardson and Councillor Hookway.
Thank you. And attendees?
Everybody in the room.
And Cabinet member?
We have Councillor James Bukowski online, and Councillor Michael Five-Cook has joined us today as well.
Thank you. Declarations of interest. Please can members of the council declare any interest they may have on any item to be considered at this meeting prior to that discussion taking place. The minutes, the approval of the meeting held on the 27th of March 2025, previously circulated. These minutes were published with sufficient time for the former committee members to raise matters of accuracy, and none were raised. They were also agreed by the council on the 24th of April. Given this, can members indicate for me that they are happy for me to sign this as an accurate record? I'll propose that. Can I have a seconder, please?
Seconded.
And a show of hands for the committee to agree. That's now. Right, okay. Items requiring urgent attention, and we have none. Chair's announcements. Welcome John Hart, member of the Council's Standards Committee, attending to monitor compliance with the Council's ethical governance framework. And I'd also like to welcome Councillors Bukowski online and Cottle Hunkin to today's meeting. Oh, she's not here. I won't welcome her. Right, there we go. And we have no public participation today. Moving on to item 7. Before we start, please can I ask members to indicate to me or the Vice Chair if you wish to ask questions after the report. And I welcome Cabinet Member Bukowski, who is online. Please can I invite you to introduce the report to the committee. Thank you. Did I not say Treasury Management Stewardship Annual Report? I did not. Oh my goodness. I will say it again. Treasury Management Stewardship Annual Report 2024-25.
Thank you, Chair. Councillor James Witkowski, Cabinet Member for Finance and Public Value. I believe the officer in the room is going to introduce the report for you today, Chair.
Okay, so Mark Gaylor, Head of Pensions and Investments, please.
Was on? Is that okay? Yes. So this is one of the 3 reports we bring you annually, and is our report on activity during the 24-25 financial year. Normally we would bring this in June, but this is the first meeting of the committee since the elections. Section 3 of the report shows that the amount of minimum revenue provision charged for the repayment of debt in 24-25 was 16.08 million. That charge was higher than in previous years because we now also have to provide for minimum revenue provision in respect of leases, although other accounting adjustments means that has had no overall effect on the general fund. Section 4 then sets out the borrowing activity, and the table in paragraph 4.6 shows that during 23-24, we had repaid £46.5 million of money market loans, which we had then refinanced in part by taking out short-term borrowing. These were called LOBO loans, which stands for Lender Option Borrower Option, which gives the lender the option to put up the rate of interest. But if they exercise that option, then we then have the option to repay the loan rather than paying the increased rate. And that's what we did. Having partly refinanced that repayment through short-term borrowing, the cash position has meant that during 24-25, we had to refinance the rest of the repayment with further short-term borrowing, taking the total external debt figure back up to the level it was at March 2023. We then took out an additional 10 million of short-term borrowing right at the end of March to cover early payment of care providers due to the implementation of the authority's new financial system. And that additional borrowing was only taken out for a week and then repaid, taking us back to the 507 million that we had in March 23. Availability of cash is a key consideration in determining our requirement for external debt. If we have sufficient cash available, then we can use internal borrowing to fund capital expenditure. But due to the deficit on special educational needs and disability, the cash balances are now at a much lower level than they have been in the past. Can I just point out there is a typo in paragraph 4.7. The balance of 108 million was the balance as at 31st of March 2024, not 2023. Section 5 sets out the investment activity over the 24-25 year. We achieved investment income of 5.5 million against a budgeted figure of 7.3 million. So we under recovered by 1.8 million. This reflected the lower cash balances that were available for investment over the year. The budget had been set on the assumption that the safety valve agreement with the Department for Education would result in us having more cash to invest, but the ongoing deficit in special educational needs and disability meant that that unfortunately wasn't the case. Section 7 then gives a brief update on where we are in the current year. The Treasury Management Strategy for 2025-26 envisaged that we would need to take out 50 million of new external debt to fund the capital programmes for both 24-25 in retrospect and 25-26. As yet, we have not taken out that borrowing, and we will hold off doing so until the cash position requires it. However, it is likely that we will be required to take out at least some element of that new borrowing at some point this side of Christmas. We expect to achieve the budgeted level of investment income during the current year. The budget of 4 million was a lower budget than the previous year, recognising the lower level of cash that would be available for investment. Committee is asked to note the report and consider whether there are any issues that it wishes to raise with Cabinet, as this will go forward to Cabinet. And I'm happy to answer any questions.
Councillor Kitchen, please.
Thank you for your report. Most of us are quite new to the organisation and don't have the historical context or the institutional memory, so sort of lean on you for that. Can you just give the committee an understanding with regard to MRP? You mentioned that leases are now thrown into that sum, but if you were to strip that out and get a trend for sort of the last 10 years, you know, longish term and the medium term, what is the trend for servicing debt, so we can get an understanding of where the organisation is going?
So minimum revenue provision is a sum that we have to set aside within the budget that is theoretically there in order to repay the debt that we have. The accounting regulations require us to do that each year. It's not something we have a choice over. There is a level of choice over the methodology we used for calculating the amount of minimum revenue provision that we have to budget for. I think the previous year the figure was about 12 million. It will have been that for some years because there is a relationship with the levels of borrowing that we've undertaken. As I said, the regulations have changed, so a new international financial reporting standard has been introduced and implemented, which means that we now need to take account of any leases that the council has in addition to its both external and internal borrowing in calculating the rate we charge. So the rate is charged based on the capital financing requirements, sort of stretching back historically, and is based on the life of the assets that we have invested in, and is related to the capital value of those assets. I don't know if Angie wants to add anything to that.
Sorry, can I just have clarification on the trend? That's really the question.
Please, yes, do.
Thank you, Chair. So as far as the trend is concerned, for many years, it was pretty much a fixed level every year. It was, if you go back many years, it was something like 4% of the value of the debt, and it was pretty much level throughout. About between 12 years ago, something like that, maybe 10, we rescheduled that. So the regulations that dictate how much you set aside allow us to change the method. So rather than having straight line 4%, we went to an annuity method where you pay less at the beginning and you pay more at the end. So rather than level, it's more of an incline. So we did that for all of our newer debt. And then more recently, we've done that for the really old debt as well. So now all of our debt is on the same basis. So you pay less at the beginning, more towards the end. And the theory behind that, the principle behind it, is the time value of money. So £100 now will not be worth £100 in 20 years' time. So it takes that into account. So it will slowly increase year on year. So it used to be flat, then it went down. Now it's gradually increasing. Thank you, Chair. I hope that explains.
Thank you very much. Can we have Councillor Mitchell, please?
Thank you, Chair. In paragraph 7.4 and also related through to 8.2, you talk about the issue of internal borrowing and the impact that this has had on our availability of cash to put into short-term investments. You indicated that last year or during this period, it was in relation to SEND and the potential of income coming from central government to cover a shortfall. We use the term internal borrowing. To what extent is it borrowing and how is it repaid? There's a question in regard to that. And is it likely the authority is going to find itself in the same position this financial year in regard to SEND and internal borrowing? The second question relates to 7.6 and the South Devon Freeport, where we're talking about further capital investment of between 6.3 or possibly 2.4 because they don't need as much at the moment. The paragraph mentions that we are anticipating a business rate return on receipts from this investment, but in effect, how is this investment secured?
So taking your first question first, internal borrowing effectively means we use our own cash. So we are not borrowing that money from anybody else. We're just taking the cash balances that we have and taking the money from that to fund the capital programme. So because of the way that capital financing rules work, that is seen as borrowing for the capital programme, but effectively we're just using the money that we have in the bank. So there would be no interest payable on it. And there will be some obviously opportunity cost in as much as we could have invested that cash if we weren't spending it on capital. So that has been the practice for many years, that we have used our own internal cash balances to fund the capital programme. And if we relate it to the previous point about minimum revenue provision, in effect, every year the minimum revenue provision adds cash into the council's bank because it's money that we're bringing in that we're then not spending. But then you could argue that we're effectively then borrowing that back to fund the capital programme in year. That was fine while we had cash balances that were in the region of £200 million, which they were certainly 4 or 5 years ago. But because we have got this deficit on special educational needs, where in effect it's not counted as part of our budget, it's a little sort of black hole over there somewhere, but nevertheless it's still money that is leaving our bank account and still eroding the cash balances that council has available to either invest or to internally borrow from. So therefore, while we have been able to fund the capital programme over the last 10-15 years without taking out external borrowing, because we've been able to use those cash balances are no longer there and no longer available for us to borrow from, and hence we noted in the Treasury Management Strategy for 25-26 that we would need to externally borrow to fund the capital programme. Coming on to the Freeport, the Cabinet agreed 2 or 3 years ago, I can't remember the exact date, to support the Freeport, and various capital works are required. It's a joint initiative between us and South Hams and Plymouth, because the area of the Freeport covers all of those areas, and it was agreed that we would. I think the total borrowing figure required for the Freeport is around 15 million. But 6.3 million of that was planned to be within the current financial year, with the rest further into the future. We're now, because projects slipped into the future further slightly, that we now anticipate only around 2.4 million of that borrowing will be needed for the Freeport this year. It is part of the council's borrowing. It has been agreed that, as the report says, that the whole point of the Freeport is it should generate additional business, which then should generate additional business rates, and those business rates will then be used to fund the capital financing cost of this. And whereas most of the borrowing that we undertake is on a maturity basis, whereby we take out loans and we pay them at their maturity date, and in the intervening period we only pay interest on them. The idea with this particular borrowing is that we would be repaying the principal in the same way as you would a mortgage, so that at the end we would have no debt to repay, and that all of those costs would be funded by the additional business rates. Now, clearly, there are risks involved with that. If we don't achieve the additional business rates, then we won't have the funding to pay for that borrowing. But the business case for the Freeport was approved on the basis that those business rates should be achievable.
ask for a point of clarification. So therefore, there's no structure in place in regard to the Freeport, similar to Exeter Science Park, where shareholder company set up of partners, etc., in it to ensure some
I'll say
security
to
of the
Angie on that
assets.
one.
Angie Sinclair, would you like to come in?
Thank you very much. So it is very different than the Exeter Science Park. So there's a legal agreement between ourselves and South Hams District Council. So South Hams will collect the business rates, assuming that the businesses are there to pay it. And then there's a legal agreement that South Hams will pass a proportion of that onto the County Council. So it's backed by a legally binding contract. We aren't a shareholder in the Freeport. Thank you. Thank you, Chair.
Thank you. Can we have Councillor Eade, please?
Is it working now? Okay. Yeah, my question relates to cash balances and special educational needs and disabilities, or SEND as well. So in paragraph 4.7, it says our cash balances went from 108 million down to 50 million in 1 year, not 2 years, as the report said, as you pointed out. So that's what it looks like. We're going to run out of cash imminently this year. And you've talked about the consequences in terms of funding the capital programme, taking out more external borrowing, the opportunity cost in terms of investment. But presumably, is it going to get to the point where we need to take out extra borrowing just to cover the SEND, ongoing SEND deficit, unless government steps in to support us in some way? And sort of what are the consequences?
So technically speaking, we cannot borrow to fund the special educational needs deficit because we can only take out borrowing to fund capital expenditure. Having said that, because we have funded a large element of our capital programme in the past by internal borrowing, what we can do is we can effectively externally borrow to replace the internal borrowing that we have undertaken in the past. So it's a bit of an accounting mechanism, you might say, but it does give us some room to replace the internal borrowing with external borrowing. Clearly that comes at a cost, but it does mean that the point at which we run out of cash, as you put it, is a bit further away than the one year if we went down in a straight line on the trend that you've quoted. But once we get to the point where we have replaced all the internal borrowing with external borrowing, then we would not then be able to borrow under current regulations and standards, and then that's when we will get to the crisis position, if you like, and hence there is work being undertaken and discussions being held all the time as to how we're going to resolve this going forward. I don't know if Angie wants to add further to that.
Yes, please.
Thank you, Chair. It's turning into a bit of a double act, isn't it? So Devon is not alone in this issue of running out of cash. We are definitely seeing a marked reduction in our cash, and it feels very much like we're bumping along the bottom of our viable cash balances now. Mark and his team monitor them on a daily basis. As far as the national issue is concerned, we're waiting for a white paper from government. So nationally, the SEND deficit, the SEND debt, as it's sometimes referred to, is £6 billion. So government is alert to this. The white paper that was going to bring forward proposals and how the government was going to tackle this was expected in the summer. In the summer budget, it was delayed to the autumn. So we're still waiting at the moment. We know from experience of government, they are a little bit fast and loose with their seasons. So autumn, for instance, can go all the way to Christmas sometimes. So we're still waiting for the white paper. Within that white paper, we're expecting proposals on what government are going to do with not only about the ongoing cost of the service, which for Devon is we're spending about £50 million a year more than the government are giving us in grant funding for the service. So significant overspending or underfunding every year. So we've got that issue, but we've also got the cumulative deficit, which is the piece that's particularly affecting our cash balances at the moment. So at the end of last year, the cumulative overspending, the cumulative deficit was £160 million. So that's cash that should be in our bank account that's not, because we spent it looking after the children of Devon. We're waiting to hear what government are going to do with that. There are all sorts of rumours. It could be that government allows borrowing. As Mark said, ordinarily you can't borrow for a revenue service. You can only borrow for a capital purpose, but government can put legislation and regulation in place that would allow us to do that. It wouldn't just be us, obviously, it'd be a national approach. But at the moment, we're still waiting. So we wait and see what government have planned for us.
I'll quickly follow up,
Thank
Chair.
you.
Yes, so how far are we from that crisis point? If it gets delayed again, this white paper, and it doesn't come out this year, are we going to reach that crisis point in that time?
My estimate is we're probably within the last year of being able to manage this. But we would approach government before we ran out of money. So other councils have already reached the point where it's not viable, not just with SEND, but with their revenue budgets. And there's a process that MHCLG government department has, which is called Exceptional Financial Support, EFS. And there are mechanisms in place where before we reach that crisis, we would go to government and talk to them about the particular issues that we have and present some solutions. Other councils who have asked for support have been given, not for SEND particularly, but for just generally, have been given powers to raise extra council tax, and they've been given powers to borrow for revenue services. So we would approach government before we reach that crisis point. Thank you, Chair.
Thank you. Councillor Julian, please.
Thank you, Chair. You mentioned we've got a black hole. We know that there's a black hole in many councils, so I understand that. But you keep mentioning about we've got to borrow money. So are we going to be selling some of the silver, like the assets, like farm estates, to get more funding, to refloat yourself for a bit? Because it feels that, if we do that, then it's going to be a double-edged sword, because some of the farms where people want to keep the farming going, because we're a farming community in Devon, it would be a bit of a nightmare. But are we going to be selling, or are we in the process of selling any farms? Thank you.
Come in there.
I was going to say Matthew would probably be the best to answer that one.
Thank you. Matthew James, please.
Capital receipts is one way that we can fund our capital programmes. So capital receipts do help in terms of that position, certainly.
Can I just ask you to introduce yourself as well? You don't have a nameplate there, please.
Okay. Chair, Matthew Jones, Director of Transformation and Business Services, with responsibility for property and assets. So, Councillor Julian, to answer your question, absolutely, as my colleague Mark has said, capital receipts, so generated from the sale of assets, is an essential part of the council's financial sustainability. As part of that, we have a programme of disposals and a programme of review. So we will need to, as an authority, to review all of our assets. And you will be aware that we have a land and property committee, and that considers disposal of assets. So we need to very carefully consider all buildings and land holdings as part of that. Thank you.
Yes, I just wanted to know, have we got anything in process? Are you in process of selling anything as we speak, please?
Yes, we do. So I can happily share the information that we provided to Land and Property Committee last week. Within that contains information on our current disposal programme and the progress in terms of those assets in terms of disposal. Thank you.
Thank you very much. Councillor Rake, please.
Thank you. Good morning, Mark. Thank you for your report. In 4.1, the preamble to the section on debt, you set out our aims when managing debt. Do we have, what I don't see there is a sort of target maturity profile. Do we have such a thing, or do we just sort of do that on an ad hoc basis with each loan we take out?
So most of the debt that we have, most of the loans that we have were taken out 20 years ago or more. There are a range of different maturity dates. They would have taken out for a range of 40, 50, 60 years, in some cases 25 in others. It is a key point that those maturity dates shouldn't all stack up to all need to be repaid all at once, because that would give us significant refinancing risk. And I think when that borrowing was undertaken, which is well before my time as well, that would have been taken into consideration in terms of the time periods those loans were taken out, to make sure that we didn't have a large number all maturing all at once. I mean, we can quite happily provide members of the committee with details of all the loans and when each of them matures. The next one that matures is, I think, March 2027. We will, well, the way things are, when that matures, we will just need to refinance it with a new loan. But those opportunities are there to look at refinancing loans as they come in, hopefully on lower rates than they were taken out, which will then save us money. And we are looking to see if there are opportunities to repay loans and seek to refinance them with loans at lower rates than the original loans. But the policy of the Public Works Loans Board is that if you repay a loan before its maturity date, then you have to pay a premium. That premium depends on where current rates are compared to the rate that the loan was taken out at. So in general terms, if you've taken a loan out at a high rate that's higher than the rate that you would get a new loan for, then you're going to have to pay a premium on it. But there may be some opportunities to make some savings on the interest costs, and that's something that we're looking at currently.
Thank you. When it comes to cash reserves, and this has been raised by other members, or concerns have been raised by other members, but do we have a formal lower limit for cash reserves, either in terms of an absolute pound amount or in terms of days, days of expenditure?
So I'm not sure there's a formal figure as such. When we produce the Treasury Management Strategy, we now have to produce what's called a liability benchmark, and that liability benchmark, which I think I explained at the training that some of you attended, is intended to look at at what point should you need to take out new external borrowing. And it basically takes your capital financing requirement, takes off your level of cash balances and said, well, this is the external debt level that you should have. And if you've still got room in that, then you shouldn't need to externally borrow. Within that liability benchmark, we include a figure of 40 million as a liquidity allowance, which suggests that that's the limit below which we should not go with our cash reserves. I think the 50 million that we had at the end of March is, I don't think we would really want to go lower than that.
Thank you.
As Angie said, we forecast on a daily basis the cash flows of the council, and they can go up and down quite markedly from one day to the next, depending on whether we're paying the staff on one day, whether we're receiving precepts from the district councils on another day, which will then take the so we need to have that balance so that we can withstand that. So while we had 50 million, just around 50 million at the end of March, generally over the summer, the balances have gone up to at some points about 120 million, and then they come back down again, but down towards, I don't think we've got back to the 50 million that we had at the end of March, but certainly they swing quite a lot. But we keep the lower level as sort of, I'd say 50 million would be the lowest I would want that to see that.
Thank you. I have a couple of other questions, but I see other members are keen to come in, so I'll wait and come back if I may, Chair.
Clive Cook, I think you had your hand up.
Thank you. Good morning. I was at the land and property meeting last Thursday, and I think the figures we were talking about, possible revenue, was around 5 million, which is an absolute drop in the ocean when we look at the financial position we're in at the moment. Am I right in thinking the answers, or the answers you're telling us, is we borrow more or we stick our hands deeper into the pockets of the people of Devon?
Well, it's essentially, yes, I suppose that's the choice. I mean, I'm not familiar with the current level of capital receipts anticipated, so I won't comment on that. Matthew perhaps can comment on that, but certainly if we want to fund the capital projects that the council has approved and that the council wants to take forward on behalf of the people of Devon, then we are likely to need to increase our external borrowing.
Yes, Angie, please.
Thank you. If we're talking about funding capital programme, then there it is set down in legislation, the methods that we have. So we could decide to fund the capital programme from our revenue budget. County Council has not done that because the revenue budget is tight enough without borrowing for capital or funding capital programme. We use a lot of external grant funding, so Section 106 funding. We receive a lot of government funding for funding the capital programme. And we can also, of course, borrow internally if we have the cash, externally if we don't have the cash, and we can use capital receipts. So funding the capital programme, we use a mix, and each year the County Council sets that mix. They approve the capital programme. So come February, you will be involved in setting that policy over the medium term. If we're talking about preserving the cash balances, then again, there are a number of ways that we can boost cash. So we get, as Mark was saying, huge fluctuations on a daily basis as council tax comes in, as government grant funding comes in, and then as spend goes out. So it varies by 100 million or more. It can shift. So that's why Mark and his team monitor it. But longer term, a strategy can be to boost cash is to sell assets and not spend the money. So we could do that. And we can look at putting money into reserves. So when the budget was approved in February just gone, the County Council at that point approved £14 million to go into our reserves. And that is £14 million a year, every year, each of the 5 years for the medium term plan. So that not only that has a double benefit. So we put money into reserves, which boosts our resilience. And because we have no plans to spend it other than to build up a resilience effectively, it boosts the cash as well. So that strategy was all taken into account when the budget was set. 14 million may not seem like a lot of money, but with the financial context we're operating in, that's the most that could be afforded at that point in time. So towards the end of the budget setting process, government repurposed one of our grants of £10 million. So we had to still set a balanced budget, still try and improve our resilience by putting money into reserves, as well as providing services for the people of Devon. So it's a balancing act, all of this. It's trying to have the capital programme we want, sell the right level of assets to fund borrowing to fund capital spend and to boost cash resources and to keep the reserves at an appropriate level as well. So it's spinning plates and juggling all at the same time. Thank you, Chair.
Thank you. Matthew Jones, did you still want to come in?
Thank you. Yes, I mean, simply to comment, capital receipts form a key part of our financial strategy. Within our current budget book, we have in the current medium-term financial plan, capital receipts forecast of circa 20 million, I think, Angie. And that's part of the review work that I talked about earlier on. So we have key targets set out in the budget book. And we're required to ensure that we meet those. Hence, we have an asset strategy around looking at generating receipts to fund the very elements that Angie has articulated. Thank you.
Councillor Rake, would you like to come back?
Yes, thank you. A couple more, if I may, Mark. The International Financial Reporting Standard 16 applies to lessors and lessees. Does the council grant, but only the lessees bit, as far as I understand it, would have an effect on minimum revenue provision, but does the council grant some leases? And if so, has that had a kind of compensating effect elsewhere in the books? This is perhaps more a question for Angie than yourself, I don't know.
Thank you. So yeah, it's when the county council is the lessee, so the person doing the leasing that's impacted on the MRP and the minimum revenue provision, so the debt set aside and the capital financing requirement. Overall, it hasn't cost the council any more than we were paying before. So we were already paying those lease fees within service budgets. It just means that it's shown differently within the account. So we're no better or worse off than we were before IFRS 16 came in. And in fact, it's been delayed for many years. Local government are quite late to this particular party. So overall, all we've done is move some spend and budget, bless you, that was in our services and moved it now under that capital financing. And it's just recognising the rights, effectively, that the County Council has over those assets that we are leasing. Whereas previously, if you lease them, they just went through the revenue account. We do act as a lessor as well. So we do lease out property, which Matthew can talk about if you particularly. Okay. So yeah, we do lease out property particularly. Thank you, Chair.
Sorry, and if I may, has the fact that we lease out property because IFRS 16 changed both sides of the, has that had, well, my question was, has that had any compensating effect elsewhere in the accounts?
No, it hasn't. Thank you.
And lastly from me, I promise, do we benchmark our treasury management performance against other councils? And do you think that would be useful?
So we have done in the past. We were members of a benchmarking club, if you like. We stopped doing that because it was deemed not to have been value for money. We do employ external treasury management advisors who will give us some indication of how our treasury management compares with others, particularly in terms of the investments that we achieve. I can't give you any specific figures, but our advisors would certainly inform us if we were not meeting up with our peers. It is something we could do more on if we so chose to do.
Thank you. In which case, because we are going to be sending this to the executive, the cabinet, I would like that as a suggestion for them to consider if, and would propose that as a addition to the recommendation so that we note it and recommend to cabinet that they consider the possibility of benchmarking our treasury management performance against our peers. If someone would like to second that, if nobody does, I'll.
So some of that will depend upon individual authorities' positions as well. And I think one of the issues with that will be making sure that we're comparing apples with apples and not apples with pears, because the more cash balance you have, the more opportunity that you have to deploy that. And it's also a question of your risk appetite and how that compares with other authorities. For example, we know that a number of authorities have borrowed money to invest directly in property with the view that they would obtain a better return on that property. And in some cases, because they've had to then refinance that debt, they haven't then achieved the returns that they were looking to achieve because they've ended up with higher borrowing costs to offset against it. So I think while it is something we could do, you would need to be sure that you were comparing like with like, and perhaps considering the level of risk you were taking compared to others, and whether you were comfortable with that too.
Councillor Ketchum, would you like to come in?
Just to come back to Simon's proposal, I think if we're getting a steer from our executive team that this isn't value added and it has been done before, I probably wouldn't support that proposal. I think of what I'm hearing is we're cash strapped and we really need to kind of focus on what are value added things at this time, and keeping as much money forward facing to the coal face would be my preference, rather than bringing in annual exercises that in an ideal world sound value added, but I think that it's been done before. It sounds expensive. Well, there's a cost associated with it. I'd sort of steer away from that, would be my view, my broad view on that, given the experience of the team in front of us.
Councillor Reid.
Yeah, it was just another question, wasn't in relation to the proposal, if that's all right. Just in relation to capital receipts, maybe I need to understand the plan better, but it doesn't seem like a sustainable strategy relying on capital receipts. If we keep selling our assets, we'll eventually run out of assets. I don't know if is the intention that in the potential future utopia where we've got spare cash, we'll buy some of the assets back, or are we just going to keep running them down until we've got none left?
So absolutely, Councillor Eade, property is a finite resource, so you can only sell them once. You know, I can't crystal ball gaze in terms of a position where we would get to an authority where we would consider, you know, acquiring assets back in our current financial circumstance, and you know that would be a wider discussion, wouldn't it, in terms of the council's financial sustainability? But you're absolutely right. Once you've sold an asset and used the capital from that you know you can't replenish that asset. That's the position.
Thank you. I think that was a very Councillor Julian.
Yes, just going on to that, I think Angela said that you know, we're having 50 million per year cut from central government, and you know, for another 4 years, that's a serious amount of money. So we're trying to save money, and yet we're having 50 million cut per year, and that's causing a great concern for me. So I wondered if Angela can come back on that for me.
Yeah.
Thank you, Chair. So the 50 million shortfall isn't a cut as such. It's that the grant funding that government give us for SENDs, or special education needs and disability education, is not sufficient to meet need. So it's not that our funding has been cut. The government has actually increased the funding by about £8 million this year. But 8 million, when you're overspending at 50, is not touching the sides, even though the intent is obviously appreciated. So it's not that government has cut, they've just not increased sufficiently to keep pace with the demand that we're seeing in Devon and nationally. Thank you, Chair. I hope that helps.
Okay, that's a jolly good chat, I think, and thanks again to Mark for your training prior to this. I think that was very helpful. And just to ask Cabinet Member Buskowski if you'd like to come in and have anything else to add. No? No?
Sorry, Chair, my mouse stopped working there. No, thank you, Chair and Committee. That was a really useful debate. I've taken on board some points from that, but thank you for all the comments.
Thank you very much. Okay, I think we've got a few recommendations and matters to raise to Cabinet coming out of that. Louise, could you sum us up, please?
Yeah, absolutely. And sorry, my voice is really husky. I also just wanted to note that the Audit Committee has requested a report back on the progress made with working with the relevant statutory partners to secure sustainable funding to support statutory services for children and young people. So just to avoid duplication, just recognising that as well. Would you like me to share my screen, Chair?
Yes, please.
Here might be easier than me reading it out. I do apologise for my voice. A second to load. Can we all see that? So the Corporate Infrastructure and Regulatory Services Scrutiny Committee welcomed the Treasury Management Stewardship Annual Report 24-25, but the committee formally records its... Can you please? Yeah.
Okay. The Corporate Infrastructure and Regulatory Services Scrutiny Committee welcomed the Treasury Management Stewardship Annual Report 2024-25. However, the committee formally recorded its concerns regarding the reducing and limited cash balances, which are significantly affected by the deficit position on the dedicated schools grant for special educational needs and disabilities, albeit recognising this is supporting children and young people with SEND. The committee noted the significant and increasing financial risk posed to the council as a result of the growing special educational needs and disabilities of the SEND deficit. Requests that Cabinet explore the feasibility of benchmarking the council's treasury management practices against those of local authorities and report back on whether such comparisons offer meaningful insights or added value. I'm not sure if we decided on that one. We did have a proposal, yes. Should we take a vote on that?
Was it seconded? I didn't see it. Okay.
Nodded. Okay, is it okay to take a vote now and then we can take it on? Okay. All right. Yeah. Notes that the Audit Committee have requested a report back on the progress made in working with relevant statutory partners to secure sustainable funding to support statutory services for children and young people. Okay.
If this revised this revised proposals, if the proposer and seconder of the original motion are happy to take this on, then this could be the substantive motion, or whether anybody else wants to propose and second this as an amendment.
As an amendment to feasibility. That's where yeah, it was just that particular piece. So do we vote now just to make sure and to amend it? Because we weren't sure that people were actually wanting that. Yeah, are you happy?
Draw it if you want, but it's up to the committee
Madam
to
Chair,
decide.
could I raise a point of order?
Yes, please.
I find this methodology extremely unusual. Normally, we have a recommendation in front of us on the officer's report, which we either accept or amend, and then we add separate points to it. I've never been in a situation where a committee clerk has done a summary of a debate, none of which has been voted upon or agreed by the committee, and we're then asked en bloc to support it or not. I would have thought clearly the way forward is the recommendation plus some additional amendments or additions to that recommendation that might cover some of those points there, and they should each be voted on.
I think we were going to vote on it after we'd looked at this to see what people think.
Yeah, so within scrutiny here at the council, what we've always done by having the scrutiny officers in the room is the recommendations are coming out from the discussion that you have. The recommendation here is to note the report, and if there's anything you wish to raise to cabinet. So what I've put on the screen is what I picked up from your discussion around things you wanted to say was coming out around the concerns to cabinet. The chair and vice chair proposed that the committee requested exploring the feasibility of benchmarking. It's up to the committee whether you wish to send that through or not. From the discussion, if there was anything you wanted to record to cabinet, what I've picked up from today is serious concerns around that. So it's slightly different to what you would normally do at cabinet or council, but that's generally how scrutiny has worked here, and that's what we've done with the other committee. So hopefully none of this is contrary to what you've been saying within the committee this morning. Yeah, I'll just park that there for a minute.
Is that clear? Yeah. Yeah. Yes, my only point was whether we want to that.
I'm easy either way. I mean, given that that's actually the only part of this, taking Councillor Mitchell's point, that has been proposed by a member of this committee, it seems a little perverse to remove it, to cut that out of this. But I mean, I sensed no great enthusiasm for it in the room, and I'm sure that Councillor Bukowski will have been listening to this conversation and will take it forward as he sees fit. So I'm equally happy for it to go.
Yeah, can we have a proposer on block?
I propose that we note the report and append these comments from this committee.
Thank you. Can we have a seconder? Thank you. No. And members, please can I have a show of hands in agreement? Carried. Any against? 2. And anybody abstaining? 1.
So that's carried.
Votes carried. How much have we got to do? Okay. Right, we'll carry on. Item 8, locality budget 2024-25. Again, please can I remind members to indicate to myself or the Vice Chair if you wish to ask any questions after the report. We don't have Cabinet Member Cotter-Hunkin, do we? So if I can ask Simon Kitchen, Head of Communities, please, if I can invite you to introduce the report to the committee.
Thank you, Chair. Good morning. So in line with the locality budget operating procedures, this is an annual review, effectively a look in the rearview mirror at, in this case, the previous council and the previous financial year, in which members had an allocation of £8,000 per year to spend. It's probably timely to look forward for a moment in terms of the opportunities members have to spend their locality budget. most members have taken up the opportunity to have some one-to-one support and training from two of my colleagues, Ali Eastland and Ali Boyd. And I think most of you have taken them up on that offer. The reporting featured in this report is live for the current year. It's online, and both you and members of the public can see the specific allocations you've made. I'm pleased to say that the process is already working well in the new council, something like 250 applications already in, and spending of something like 194,000 within the new council. So very happy to take any questions regarding the report. Thank you.
Councillor Mitchell, please.
Thank you. Thank you, Chair. Has it traditionally been the policy to allow carry forwards from one financial year to another? I notice in the relationship to one former councillor here, we get a carry forward, the left a budget of £20,000 to spend. Therefore, is there any indication within our criteria that there is a limit per application? I would think it'd be somewhat difficult to sustain one application that might have been spent on £20,000 if we've got that money available. And is it the intention of the authority this year to have underspend from last year carry forward to this year?
Thank you. Thank you for the question. So in terms of the carry forward from last year, the report already details the £53,000 underspend has been approved as carry forward into a different funding mechanism. So there's a new funding stream for young people, specifically places to go and things to do. So the £53,000 was carried forward and placed into that fund, and is being spent as we speak. It has been custom and practice that there's an annual decision taken in terms of the ability to carry funding forward through from year to year. That's still subject to an annual decision, as far as I'm aware. And in terms of the limit of allocations, I haven't got that to hand, but that's detailed within the operating procedures in terms of the limit of applications. But I'm not aware that there's a ceiling on the expenditure, but I'll come back to you, Councillor Mitchell, with the answer.
Chair, just as a follow-up to that response, when we talk of are we talking about allocated income that has not been claimed or spent within the financial year, or income that has not literally been allocated? Because sometimes I understand there's a carry forward, obviously at the end of financial year, people who've made a claim, you've as a county councillor approved it, but it's not paid out within that financial year. So is that taken account of within these figures?
So just to clarify, so at times expenditure is committed but actually not paid, and that commitment is able to be carried forward in previous years. Now that's subject to an annual decision, as I alluded to, in terms of the cabinet decision in terms of the carry forward across years. But essentially, particularly for highways projects, a member has made a commitment to spend on a particular project, but there's been a delay in that spend. So in effect, that commitment previously has been able to be carried forward into previous years. Was that the question you're asking? Thanks, Councillor Mitchell.
Councillor Kitchen, please.
I'll not confuse my name with the head of communities, who is Mr. Kitchen. I'm Mr. Kitchen, but they're both strong names, so
apologies.
I'm very happy either way. There used to be, this is a little bit historic, but it's just an aid memoir and maybe a point of reference for the other committee members. There used to be community-wide grants. So the idea was, rather than division by division, there could be pots of money. I don't know if you're up in North Devon and there's a theme across North Devon, you know, you could get a community-wide grant there. I mean, there's a lot of themes in Exeter. We have festivals, you know, they all come to me because I'm in a city centre and try and, you know, nag me for quite rightly for pots of money, and I'm trying to support the whole city centre. So there's I could understand the previous community grant wider than division-based sort of thing. What I'm getting at is that decision's been made to remove that, and we've got the temporary youth fund, which sounds great. But my question is to put it out there to the wider scrutiny committee as well, as do we think, given the recommendation for next year is to keep no increase in the division grants, they're going to stay 8,000 per division. Are we happy with that as a scrutiny committee? Perhaps the head of communities can justify that freeze and spend, but it's not inflation linked. And I would sort of put that out as a concern, specifically because I get a real hammering being the city centre myself.
Thank you. Thank you for the question. And maybe with your surname, you didn't get teased quite as much at school as I did. In terms of, there's some good news in terms of your question. Thank you. So, firstly, members have the ability to join up and in effect across wards can pool their funding, and that's already happening within the current year. So, for example, members in Exeter have previously got together and pooled funding for particular kind of citywide bids. The council has retained 2 community-wide pots. So I've already advertised the Things to Do, Place to Go fund for young people, but there is still a small allocation, just over £100,000 for something called the Growing Communities Fund. So those county-wide bids are still available, and those bids are still coming on. So that's certainly an opportunity. I previously advertised my colleagues Ali Boyd and Ali Eastland. They'll be happy to speak to members about some other funding sources out there. So if you've got a particular idea in mind, if you've been approached by a particular community group, there are other funding pools that we can potentially tap into or link to.
Thank you. Can I just come in here and please ask politely, people don't talk when other people are speaking? Thank you. Okay. Councillor Julian, please.
Thank you, Chair. Just wanted to make it crystal you can make it crystal clear for us that because I get this in my ward all the time, is that the £8,000 allocated per councillor is it that if we don't use it, we lose it? So is it got to encourages the councillors to use their £8,000 locality budget, and it's not rolled over and it's taken back into the council? So just crystal clear, if you don't use it, you lose it. Thank you.
So thanks for the question. So obviously at the end of the previous council, that's absolutely what happened. The unallocated individual member funding was lost, if you put it in those terms, and has been carried forward, as I say, for other use. There will be a decision each year in terms of any underspent funds on a councillor by councillor basis. So, but I think the spirit of your question is right. Use it, and then you won't lose it for community good. Councillor Kitchen, what I didn't answer previously was your question around decisions for the future in terms of the budget funding. I'm not aware of anything on the table, or certainly decisions made about future allocations of locality budgets.
Thank you. Councillor Eade.
Thanks. In terms of the rollover, it's from year to year. It sounded like you were saying it's up to Cabinet to decide whether that happens or not. But in our constitution says the present practice of the council is to allow carry forward in members' locality budgets from one year to the next. So it is written into our constitution. But are you firstly, are you saying there's a chance that actually they might not do that, even though it's in the constitution? And secondly, is there a reason why it can't roll over between councils? So that money is kind of assigned to benefit a division. It doesn't seem fair that a division will lose all that money if the previous councillor didn't bother spending it, as was the case in my division. We lost £14,600 from our division because my predecessor couldn't be bothered to spend it. So why can't it roll forward to the next council?
Thank you. Thanks for the question. So in terms of the question around the decision and it being in the constitution that it's custom and practice, that wasn't, those weren't the words you used, but effectively that's what we're talking about. Both those statements are true. So historically, it has been the case that members have been able to carry that forward through effectively their term. But that still remains an annual decision that is made by the council. The second point in terms of, I may have to seek assistance in terms of why decisions made at the end of the council not to carry forward.
Thank you. It's a good job I came along today, I think, isn't it? So technically, there's nothing that stops the locality budgets being rolled from one administration to another. Obviously, it couldn't be held by the same member if they weren't standing or they weren't elected, but it has been custom and practice that the sums will roll within an administration period, and at the end of the administration they do not roll. For this particular year, the decision was taken by Cabinet that the sums would not roll forward to wards or divisions, but the underspend of £50,000 would be put into the community grant so that the good for the community was not lost. But as Simon has been saying, it is very much an annual decision. So Cabinet make a decision as part of, as we call the outturn, which is where we take the results of the previous year, the financial results. And there could be a time if we're not able to balance our budget, if we're not able to come in on budget, that the 151 at that time could recommend to Cabinet that we do not roll them. So it is not a given that sums will roll from year to year, but there's nothing technically at the end of an administration that stops them from coming forward. It was just the decision that was taken, and custom and practice has had that happen. Although, as I say, we did move the money into community grants, so it's not been lost. Thank you, Chair.
Councillor Reid, are you happy with that rollover?
Yeah, so basically Cabinet could have decided this year to allow the money to stay within the divisions if they'd wanted to, but they chose not to. Okay.
Chairman, it would be really helpful to know if the Cabinet members' intention is to keep this going, simply because we do get asked as local members by many groups. I've spent all mine, so I'm now in the situation of, I have to say, I do not know if there's going to be any money next year. So our parishes, for those of us in rural areas, are at the moment starting to think about setting their precept, and they need to know whether we will be able to assist them in purchasing. In my area, it's all about reactive speed signs, to be honest. So that's the sort of thing that would be helpful to know. But I don't know. Sorry, I haven't got my glasses on now. I don't know if the Cabinet member's here or not.
Yes, if I could bring in Cabinet Member Boskowski, please. If you've got an answer.
That deals with, sorry, I've forgotten her name. That's yeah.
Okay.
Thank you, Chair. Councillor James Boskowski, Cabinet Member for Finance and Public Value. It's our intention to put it forward as part of the budget proposal for next year to continue with the grant scheme.
Thank you. Angie, would you like to come in?
Thank you. Just for clarity, all of the budget setting is subject to Cabinet approval in February and ultimately the County Council. So the budget of the County Council was set at the County Council meeting at the end of February. Thank you.
Councillor Mitchell, please.
Just a clarification on Councillor Davis' point, if James is still online. He clarified the budget will be in place next year. Could he indicate the level of that budget? Is it being maintained at the same level as this year, or increased or decreased?
So Angie, yes, please, if you'd like to come in there.
Thanks. So just before Councillor Butch-Gussie comes in, it's an annual budget that is decided by the County Council February of each year. So the portfolio holder, the member, is not able to confirm because it is subject to the annual approval of the budget by County Council. Although he can obviously give his political intent, it is subject to that cross-county council approval.
Thank you.
That
Okay.
intent
Sorry,
would be
James.
most helpful.
So James, anything to add?
Yes, thank you, Chair. As I said in the answer to my first question, it is the intention to put that forward as the budget proposal. It is in the gift of all members at the County Council, whether or not they approve it. As for the level, at the moment, I can't confirm. We are still very in the early days of formulating our budget, but it is the intention to keep it. And I personally will be doing everything I can to keep it the same levels, but I cannot make any promises at this stage.
Thank you very much. Councillor Kenny.
Thank you very much, Chair. I would just like to say that I think the locality budget is one of the better things that we do at the council, and the joy that it brings to communities who have relatively small amounts of money spent for them, feeling that they actually are appreciated by the rest of the county. And I think that this is one of the really good things that we do as a council. And I think that we should be praising the people who actually do it and run the scheme far more, because it really is one of these things that we can actually go to people and say, we're doing something for you in your community. Thank you.
Thank you, everyone. I think that was a very good discussion. I don't think we have any recommendations or matters to raise to the Cabinet. We, as the committee, are just asked to note the report.
So moved, Chair.
Yeah.
Chair, do we not have to note that we wish this system to continue and we would like to maintain the level of funding? I'm happy if there's a seconder to put that forward, that this committee is fully in support of this scheme and would like to remain in place and the funding levels to be maintained at least at their existing level.
Okay. We've got a seconder. Yeah. Any abstentions? Any against? No? Full house. Thank you. Okay. Did we have anybody? No. Oh, no. Okay. Item 9, election of a domestic violence and sexual abuse scrutiny champion. We haven't had anybody put their names forward.
Chair, if anybody would like further information on this role, we can set up a conversation with Liz Sirasolu, who's our lead for this area. We've got champions in children's and adults, but if anybody has an interest but would like further information, please do let me know. I'm really happy to get a conversation set up on that if it would be help members for clarification, and we can roll that forward.
Turned off. Councillor Keeble, please. Yes.
Thank you, Chair. Having had some experience of this area in the past, I'd be happy for my name to go forward.
That's fantastic. Thank you very much. Sorry? Is that a yep? Can we have a proposer, please?
I propose that Councillor Keeble be appointed as our champion against domestic and sexual violence and abuse.
Thank you. And a seconder? Thank you. And I can have members vote for? Unanimous, Chair. Unanimous. Perfect. Thank you very much, Councillor Keeble. That's great. Moving on to item 10, the scrutiny work programme. Louise Remick can update on this. However, 2 items have come forward which the Chair and Vice Chair are minded to progress. The Children's Scrutiny Committee have asked us if we will take a lead on a focused cross-organisation piece of scrutiny work on the joint children's and adult systems replacement project. This is the delivery of an integrated and efficient care management system, especially after we've been talking about Zen today. So can we have a proposer? Do we need a? Yep. Can we have a proposer to be? Is the committee happy? Or yeah, is the committee happy to add that to the work programme? Okay, perfect. And the second is Devon's street light trial. The council have been running a trial on street lighting, which our committee considered and made recommendations on in September 24. The recommendations informed a decision on the street lighting trial update and future policy considerations at Cabinet in December 2024. The trial runs for 12 months and the findings will inform a policy update early in 2026. I've been asked whether we would consider this item as part of the work programme, and I propose we set up a standing overview group for this item. Yeah, everybody happy to support? Yeah, that seemed popular. Okay, items previously circulated, item 11, the risk register, and part. We were going to do that afterwards.
Oh, really? Okay.
That's okay. Yeah. Oh, we were going to do it afterwards, weren't we? Yeah, we'll do that afterwards. We'll move on to part 2. There are no part 2 items. I want to thank the committee for their attendance today and to our cabinet members and officers for their attendance and reports. As our meeting has been relatively short, I'd like to ask the committee members to remain in the room for a short session to discuss further the future topics for scrutiny. The next meeting is on 20th of November and I will close the meeting. Thank you.
A bit of gavel.
Bang. Okay.